Good morning. Everybody hear me?
Yes, sir.
Okay. We'll call this meeting to order and pledge allegiance, please. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. I have some appointments to make. Parliamentarian Joe Moore, Sergeant at Arms Chief Dave Massey, Timekeeper Tom Butler, and Teller Bill Wentworth. We will. The next thing on the agenda is the ascertainment of a quorum. I know they're counting. As I said, while they're counting, there are handouts over here on this table. If you didn't get a chance to pick one up, you came in or didn't know they were there. They're over there, financials and various other pieces of information for you. While they're counting, I'll go ahead down the rest of the agenda. We have approval of minutes for the annual meeting from last year, presentation of the Sam Wilkins Volunteer Award, then we will have reports, a legal report, auditor's report, financial report, then a president's report, general manager's report, old business, which there is none, new business, which there is none, election results, public comment, and adjournment. Sir.
Good morning, everyone. First of all, before I give the forum report, I would like to recognize members of the committee: Cheryl Bissell, Laura Moon, Steve Butler, John Soper, Dave along with me. Folks have an excellent job. Put no organization or no committee time to these folks to process. We have a couple volunteers here who are on the committee. Tech Superintendent Tom Butler, Carol Harry, and Mark Bear. Thank those folks. Confirmation form proxies 2004 meeting. There were 103 property owners, 106 properties. With your proxy, this has been certified by myself as chairman of the election committee, by Jack Collins, secretary of the record, certified the account active. Okay. In addition to those 106 properties, we had 55 property owners. We have the farm.
Thank you. Okay. moving along. The minutes of the August 10th, 2013 meeting, the approval of the minutes. Do I have a motion to accept the minutes? Do I have a second? Any discussion? All those in favor of accepting the minutes? Aye. Opposed? No. Thank you. I have the privilege this morning of introducing someone to you who has already told me that she doesn't really want to be recognized for the work she does. She does it from the heart. She was born and raised in Maryland. She's been in Ocean Pines since the year 2000. She's a mother of 3 children and 3 grandchildren. She's been in the nursing field most of her professional life. She's been an RN, nurse anesthetist, easy for you to say, director of nursing at several facilities in Maryland, Delaware, North Carolina. She's owned 2 consulting companies and was a state employee at the Department of Health and Mental Hygiene. During her years in the medical field, she has written regulations for long-term care facilities, also wrote the Medicare Provider Reimbursement Manual for Maryland long-term care facilities. She opened the Life Care Center in Lofton Park in 1992, which is part of the Nanticoke Memorial Hospital in Seaford. She is now part of the Genesis Health. It is now part of the Genesis Healthcare. In addition to her professional career in the medical field, she has volunteered countless hours in her community, churches, clubs, schools, hospitals, and Special Olympics. She has organized and participated in many programs and activities for children, adults with special needs, and for the elderly. Due to her dedication to her wonderful daughter, Lisa, who is here with us today, who is especially challenged, she was inspired to start People Enjoying People, or PEP Club. The sole purpose of PEP Club is to provide an arena for intellectually disabled adults in Ocean Pines, Ocean City, Worcester County area to have fun as well as form companionship with friends and peers on a regular basis. The club has grown to 48 members in 4 years. I am very proud to recognize Myra Schmitz. Myra, come on. Congratulations.
Thank you. I am honored, and I thank you all for believing in me, and I thank I humbly share this award with all the wonderful people that no man's an island. I couldn't do this without my friends and my neighbors and my family and Lisa. She's the one we started for, and I thank God every day for all of my blessings. So I'm honored. Thank you so much.
Okay. And we'll turn the podium over to Mr. Joe Moore.
Somewhat similar to last year, legal matters in Ocean Pines Association have been related primarily to advice on procedures and related matters with the Board of Directors. Recently, the Board determined that in order to avoid potential delays in the resolution of restricted covenant enforcement and related CPI matters, the instructions to my office will be to proceed under the provisions of the enforcement resolution in what we call a fast-track manner, where the Board turns the matters over to my office and I then proceed to take whatever legal action is necessary to resolve the issue. As a result of the action of the Board of Directors at its meeting on July 29th, my office is proceeding to file suit in numerous actions, 9 specific actions, including a long-standing issue with abandoned and junk vehicles. In addition, based upon the recommendations of my office, in 3 other matters at that meeting, the board voted unanimously to take appropriate action under the provisions of paragraph 14 in each of the Declaration of Restrictions, which allows the OPA staff to perform necessary maintenance with regard to the properties at those 3 locations. On Thursday, 5 of the 9 lawsuits were filed in the Circuit Court for Worcester County. In July, Mr. Thompson and I attended a foreclosure of a prior lien which had superiority over the Ocean Pines liens of unpaid assessment. And due to the reasonable bid price from the auction at the foreclosure, the association bought the property and will proceed to place the property on the market for sale. The circumstances were caused by the disparate comparison of the high assessed value of the property versus the relatively small amount of the superior lien. By thus buying the property, Ocean Pines Association has a reasonable chance of achieving payment of all of its assessments on the property, which would have otherwise been prohibited by the foreclosure of a superior lien on the property, such as a mortgage foreclosure. This is a proactive stance that is being taken by the board, where we analyze the value of the property and the value or expense of the foreclosure purchase, and if it has a reasonable comparison so that we own the property and sell it, we thereby collect all assessments that would otherwise be shut out.
And, Mr. President, that's what briefs are for.
Any questions?
Chris Hall, the auditor's report.
Good morning. Similar to Joe, for those that were here last year, I spoke a little bit less about the numbers and more about the audit opinion itself. I know I'm going to try to do the same this year, since I know the treasurer and assistant treasurer are going to go over in a little more detail, give a treasurer's report, go over the numbers. And also, our entire financial report is also on your website. For those that are aware, the entire 38-page document is on the website if it's not already. Last year I talked about the audit opinion and what it means. And the reason I did that was because for you, the membership, and for the board of directors, that's the most important piece. As an audit firm, we're hired by the board to render an opinion. And this gives not only you, the membership, but the board, that the comfort that you need, that your money and your financial statements are fairly presented in all material respects. And once again, the association received an unmodified opinion, which is a clean opinion, which is the highest level of assurance that an independent audit firm can give on your financial statements. I keep saying your because they are your financial statements.
Use your microphone, please.
I'm trying, okay? How about this? We'll do this. Is that a little bit better? Perfect. Everybody good so far? Okay. So rather than talk about the meaning of the audit opinion, which I did last year, I want to spend a few minutes talking about just the audit process and the procedures that are performed that enable us to actually render that opinion on your financial statements. So before we even begin the audit, the audit firm needs to decide how we're going to staff the audit. And that process begins back in March and April, and it could even be before then. Your year end is April 30, 2014. So what we do as an audit firm is we try to come up with a staff of both a mix of experienced personnel, those that have seen homeowners associations, seen nonprofits. I'm part of that process, but we also have an audit manager, senior, and other staff accountants that also work on your audit. And what we try to do is mix that up with those that have been here before and those that haven't been here before. And the reason we do that is that even though the same audit firm, TGN Group, has been doing your audit, the staff level that see your books, talk to your people, perform the audit procedures are constantly changing. So you're getting a fresh look, fresh faces. The same person's not coming out year after year after year and doing the same things. An audit requires an element of unpredictability, and we do that by looking at different accounts, performing different procedures, and also just bringing different staff out here. So even though the same firm, you're getting a lot of different people and a lot of new perspective year over year. So after the audit staff, we got to do some planning, and that consists of reviewing the association's documents and correspondence throughout the year. I read the newspapers. I look at internal documents. I live down here, so I hear, I see, I look at everything that's written. I look at internal statements that Art prepares. And that allows us to come up with preliminary expectations, even before we start the audit, forming procedures. As part of the audit, you have to have an understanding of what you expect to see in order to do the audit. So that's part of the planning process also. So then once we do that, we come out April 30, May 1st, and you have inventory. You look at your balance sheet. You have items at the golf course. You have items at the yacht club. And we actually come out and count those items. We don't count everything. It's a sampling process. So we look at some of your high dollar items. We take some from your counts and go find them. We take some from the things that may be on the floor and go make sure they're on the sheets that are being provided to Art. Once again, we're mixing things up there. We also send confirmations of all your balances to vendors, to banks, to third parties. We reconcile subsidiary ledgers to the general ledger and the financial statements, as well as performing analytical procedures at the end of the audit to make sure that they're in agreement with what we did at the beginning, all those preliminary expectations. Whatever we think should happen at the beginning should be what we see at the end, and if it's not, we got to figure out why. So all in all, the audit starts, like I said, March or April, and culminates here at this meeting in August. So the process not only takes several hundred hours on the part of our audit firm, but also numerous hours from Art and his staff, as well as Bob. So not only they're trying to do their day-to-day activities and produce monthly financial statements for you all that get produced in the paper, they're also trying to do what we ask of them in order to meet the deadlines that are imposed to be here today. So I know I'm going to stay away from the numbers other than just saying that the association is still in sound financial health, and your clean opinion speaks to that. Thank you very much.
To give our financial report, verse 12. Contact.
Hey, Mr. President, I want to protest today. He is not a elected member on the board. This man has to make a report, not the assistant.
Dutch, sit down.
Dutch,
sit down.
Against the rule.
I don't think he likes me.
No, we don't like you at all.
Good morning, Dutch. Okay, it works. Can you hear me in the back? All right. First of all, let me point out that I am the assistant treasurer of the association, an officer of the association, an officer of the corporation. Thank you. What we're going to do this morning is similar to what's been done in recent years, and that is to give you a summary financial report. You've got the handouts, the green and the blue packets, and if you don't have them, they are over here at this table, but hopefully most of you have it. The treasurer and I circulated around the audience and them out. Okay, this summary comprises the following topics. Before I get into these, let me point out one thing. The keeping of the financial records and the preparation of the financial statements is the responsibility of the association, not the auditors. Some people think that the auditors come in at year-end and prepare the financial statements. Not true. As a matter of fact, under professional ethics, they cannot do that. You cannot audit what you prepare. So these financial statements, footnotes, disclosures, everything is the association's product. The auditor, Chris Hall, representing DGM, provides the audit,
The audit report, I think, is some 50-some pages, and it is online, Chris. It's already up online. Those of you who were wondering about that. It's already there, right, Art? Okay. So here we go. Summary financial information versus budget in the prior year. One thing that's different is the prior year. I gave this same presentation to the board of directors a couple of weeks ago, and it was suggested that perhaps we also put the prior year numbers there. I have done so. It may be a little too busy, but we'll try this, and if we get any feedback that says too much data, too much information, perhaps that can be eliminated in the future. Whoops. There we go. The bottom line. People like to focus on the bottom line. Of course, the bottom line in Ocean Pines, we budget zero. We determine all through the budget process, which is very, very extensive, all the expenses, all of the performance financially of the amenities, the necessary contributions to the reserve accounts, including funded depreciation, which is a non-cash expense, but nonetheless an expense. And then at the end, you divide what you need by the number of people paying the bill. And that's you, the members. That's how the association's dues, its annual assessment, is determined. So the revenue equals the expenses and the contributions to the reserve accounts. Thus, the second column, which is the FY14 budget, is in fact zero. This year, the third column over, and you notice the assessment revenue is exactly on line, because that's what we built. In any event, the second column shows the actual results for the year, and the bottom line here is $14,746. Now, you've got this in your packet. Your packet consists of two things. Number one, it is just simply a reprint of some of the pages out of the audited financial statements. And secondly, it's some schedules that we have prepared. It's not these identically, but they're similar. So you have the information in front of you if you cannot see the board. Okay? So where do we go? The variance to the budget, bottom line, is $14,000. I think as most of you in the room know who pay any attention to the financials, the amenities, and some in particular, have not performed up to budget. We know that. That's been throughout the course of the entire year. From a management standpoint, the challenge then is to try and make up whatever shortfalls there might be in meeting the budget for the amenities by other means, so that we don't run a deficit for the year. That's a bad thing, personally and for the association, to run a deficit for the year. So we did not run a deficit for the year. We ran a surplus. Small one, $14,000, but nonetheless it's called being in the black as opposed to being in the red. Okay. Favorable to unfavorable, and you're going to see the amenities on the next page. All the amenities are detailed on the next page. But here we have the fourth column shows the variance between the actual budget prepared and by the management, not only tweaked, but substantially reviewed and modified by the board of directors and ultimately passed. The two most significant expenses we have as an association relate to, of all things, police and fire. And you'll see that later on in the PPO we call, what part of your assessment goes to meet those expenses. But we were positive in both those categories by $183,775. Again, you can't see it. There it is. The result is for two reasons. Number one, police received more funding from the county than was originally budgeted. Some $60,000 in round numbers. In fire, we have a provision now under a modified agreement with the fire department. We fund the fire department. The county and Ocean Pines funds the operations of the fire department. It was suggested some years ago by some individuals, I'll plead guilty, that the fire department start billing insurance companies for EMS runs. There was some experience by other fire departments. I frankly had it back in Ohio. And we encouraged them, and they ultimately started that practice. That practice of billing insurance companies, which includes Medicare, by the way, brought them in each year since its inception $300,000 of revenue. That significantly improves their situation and significantly improves Ocean Pines' situation, because we're what they call the gap funder. Whatever their shortfall is between county funding and other funding, we, Ocean Pines, under the terms of our agreement and our relationship with them, fund that gap. So if they have $300,000 more revenue coming in, guess what? Ocean Pines benefits. They had some concerns, however, about the funding for their reserves, legitimate concerns, because when you fund reserves based on the cost of a vehicle, let's say, and then have to replace it at an inflated amount, you can have a real shortfall. Well, we addressed that concern. We arrived at a memorandum of understanding which essentially modified the previously existing agreement with the fire department to provide for funding on a replacement value basis, a very significant factor for them. So we benefited from the arrangement. They benefited from the arrangement. And one last thing before I move on about the fire department. We mutually agreed and incorporated into the agreement something called a look back or a true up provision. So we fund them based on budgets. You could be off in your budgets, either way. We thought it only fair both parties to actually fund on the basis of the actual results, not the budgeted results. So what we put into effect, 3 years ago, I believe, were provisions that said, okay, submit your budget, we review it, we fund at that level. However, we will we'll chew it up in the following fiscal year, good or bad. That has helped us tremendously. They have performed better than budget in each of the last several years. We, Ocean Pines, have benefited from that by, in effect, chewing up the performance, our funding. And so what you see here in this particular fiscal year, a rather significant budget variance of $92,000, is exclusively related to the true-up provision, which meant that the credit we get in this year related to their financial performance in the prior year. So it works for both parties. The rest of the categories I'll move through quickly. Public Works and Maintenance, $5,000. Recs and Parks, $5,000 variance from the budget. Other includes administration, finance, public relations, membership, and that positive variance for the year was $199,000. Pretty significant. 2/3 of that, however, relates to positions that were not filled during the year. I suspect that management might have filled those positions had the performance of the amenities been better. But the fact of the matter is, the amenities, some of them, were falling behind the budget, and as management sometimes does, it manages. So it postponed several expenditures, and 2 positions went unfilled for the year, and quite frankly, that added about $130,000 to that $199,000. We'll move on to the amenities, which in the aggregate, as you see, were budgeted for a profit, $191,475, but actually came in with a loss of $167,897. Ladies and gentlemen, that's a swing of $359,000. And had not other categories been impacted positively, that would have been the deficit for the year, if we just had to rely on the results of the amenities in a net basis. But that didn't happen because the $359,000 negative to budget variance on the part of the amenities was offset by $382,000, as you see in column 4, from the operating departments. And then we have a small matter of capital and debt payments. So the bottom line, if you will, was $14,000. I'm going to put an asterisk next to that statement and come back to it later when I say the bottom line, because this year we have 2 bottom. Here are the amenities. And I think as Tom Terry has pointed out in various communications, the net operating performance of the amenities this year, net, all of them combined, was less than $20 per member. $19.75, something like that. So each one of you contributed $19.75 to the financial performance less than $2 a month for the amenities. Now, the amenities include profitable and not profitable. So here we go. And appropriately, perhaps inappropriately, I've categorized them into those with brackets, which means they lost, red, and those that had a profit, black. No parentheses. The whole concept here at Ocean Pines historically has been to try and make the amenities break even. After all, they are amenities. These are not business. So what we've tried to do, though, the board has tried to do long before I was involved, and I'm not on the board and haven't been for 2 years. I help out a little bit. But in any event, the idea is to try and get operationally the pluses to equal the minuses. And as I showed you on the previous slide, the amenities actually were budgeted to make a profit. They didn't, but they were budgeted to make that profit in the second column in the aggregate net of 191. What that means is when the dues, the assessment was determined, you all got a credit in your billing, your assessment, for the performance on a net basis of the amenities. Now again, we didn't meet that budget. We actually had a loss, but I don't think any of you got a bill for that, did you, afterwards? No, you didn't. As a matter of fact, we managed the $14,000 number that I talked about. Okay, so the golf, of course, we've read a lot about the golf. It did indeed have an actual deficit this year of $326,000, down significantly from the prior year, by the way, which was around $540, I believe. Yacht Club, we know the Yacht Club, obviously, very unusual year. Closing, new building, old, terrible building. So the Yacht Club came in at $189,000 versus the budget of $105,000. Aquatics did not have a good year. It was budgeted at expenses to exceed revenues by $119,000, and it came in at $194,000, $74,000 worse than budget. But that has seen some real turnaround, I think, in recent months. We've got a new aquatics director. The reports, although early in this fiscal year, are some encouraging things are happening there. Tennis is a very small amount. The marinas make money, as you see, budgeted at 136. They came in 109. A lot of that has to do with gasoline sales. And we have benefited tremendously from a board of directors initiative a few years ago to have non-ethanol gas. Tremendous boon to Ocean Pines. At the boaters. The Beach Club, as you know, it's only open in the summer months. It's budgeted at 83, came in at 78, pretty close to budget. Beach Club parking, that wonderful profitable operation that the IRS came down hard on us on. You all remember that, don't you? You'll see that in a minute. I mean, our only source of making up deficits is us, the membership. We pay the bills. So, okay, that's the amenities, and we'll move on. This is something that a lot of people respond to well. It shows where your assessment is spent. So we call this PPO per property owner. That's old lingo, though, isn't it, Art? PPO. This compares the budget to the actual based on the $914 dues assessment for last year. Again, this is the fiscal year ended April 30th, right? As you can see, of your $914, $570 budgeted and $525 actual related to police, fire, EMS, and other operating departments. So $570 was operating departments, including police, fire, EMS. Then you get some of the amenities. Again, I explained that. We budgeted the bracket at number 23. We actually budgeted that to be a profit. As it turned out, it cost $20 per member, and that's the number in the actual column. So $20 out of the $912 is amenity performance. Sometimes I get the feeling that it's like $300-400, but it's not. $20 a year. Okay, capital costs. We do have depreciation expense, a non-cash expense, and an expense nonetheless. $100,000 vehicle, a backhoe of some sort, utilizable for 10 years, essentially costs $10,000 a year. That's what depreciation. The 5-year funding plan, that has capped out at its max, but continues to provide an important source of funding for the major capital investments still required in this community beyond what has already been accomplished. Bulkhead and drainage, there is a community portion of bulkhead reserves. The vast majority of the bulkhead reserve account is paid for by those who have bulkheads, and they pay a differential. But we, Ocean Pines, own such Pintail Park, and others come to mind, but we all have some interest in and fund to a limited degree, and that limited degree is $22 for the community-owned, if you will, bulkhead. So our total operating capital was budgeted to be $898. We came in at $896. That last line item was 16. That was part of the 5-year funding plan. It was a $4 of the $30 increase over 5 years. So 26 of the $30 went to the 5-year funding plan. Thus, you get 26 times 5 is 130. The other part of it, the $4 increase, went to eliminate a $500,000 operating fund deficit that you'll see more about in a second. Here's the amenities on a per member basis. Golf was budgeted to lose this year. Of this current year in, by the way, the actual budgeted loss for golf is under 100,000, 85, 88,000, something like that, right? 90. The Yacht Club, again, that was a very unusual year last year. Aquatics. So this just breaks down those that, in the top 4 are those that actually cost money. They had net expenses over revenues. The others had net revenues over expenses. But the whole daggone kit and caboodle of amenities was budgeted to have a profit of $23. In fact, there's a $20 cost to you all, the members there. One of the points we wanted to make here was performance over a longer period of time. And this is significant for a couple of reasons. Number one, the board of directors in recent years has faced the challenge of trying to wipe out a deficit that was incurred during the years 2007, 2008, 2009. In each of those years, you see the numbers, 247, 478, 137,000 in 2008, 159,000. We were cruising along. I wasn't involved, but we as an association were cruising along, losing money each year, negative the budget. And consequently, we had built up, our balance sheet reflected a deficit in its capital account, if you will. Well, somebody had to pay that bill, and that bill had to be paid by us. So what the board did a few years ago as part of the 5-year funding plan was incorporate that $4 component increase that I talked about to put those monies aside, and at the end of 5 years, we would have substantially eliminated that deficit of $500,000 that some say was inherited, and it was. So we've dealt with that. The next 5 years, 2010 to 14, you see favorable to budget, $174,862. Next year, favorable to budget, $38,000. Following year, favorable to budget, $151,000. Fiscal 2012, IRS matter, fiscal 13, $441,000 negative to budget. It's mostly golf related, and we all know that. Now, this past year, again, there's the $14,000. I mentioned earlier we had 2 bottom lines this year. One was positive $14,000. The other was positive $462,000. What happened in this year just ended, and you'll see it in your financial statements, is that putting away that $4 increase component into a separate account, and then we released it all this year, is that concluded. We brought to an end the $4 increase which was there for the purpose of eliminating the $544,000 up top. So that's done. Unfortunately, that IRS matter caused us to have yet another big hit, another charge, and so in the fiscal year 2012, we took a hit, if you will, an expense of $459,000 to settle what essentially was over a 10-year period IRS matter that we took. The last decision made by the Board of Directors, not participated in that, was to not appeal the decision to the United States Supreme Court. That's where we were. We had to make a decision whether to go to the Supreme Court or not. And we chose to not do that, to fold the tent and settle up and move forward, revise our policies going forward so they were not subject to that unrelated business income tax on the parking operation up there at the beach club. But we had to pay the bill. So what the board did then was decide to extend that $4 component that had been used to eliminate the $500,000 deficit up top. It's decided to continue that at the same level, not increase it further, but continue it at the same level and wipe out the 459 IRS. So that is in place. That decision has been made by the board. It's incorporated in your assessments. It allows no further increase. In fact, it will decrease for that component when the amount is satisfied. So what we end up with is when we add the 459 charge, our deficit is up to 618. Back on April 30th, 2006, before we started running losses in those 3 years, we had a positive surplus on our balance sheet of $59,000. Positive balance simply means that your assets exceed your liability. That's all it means. It's your net worth, in effect. Exclusive of plant, all the property and equipment. We had in the operating fund a $59,000 positive balance or net worth. But that quickly went away with the losses incurred. Further went away with the $459,000 of the tax. So with the plan in place to eliminate that $459,000, the remaining deficit to be eliminated is $100,000. All right, we're getting to the end here. I think this is 2 more to go. Actual projected operating fund deficit elimination, just a little enhancement of what I said a moment ago. The deficit at April 30th, 2013, if you look back at your booklets last year, or in fact even this year, and look at the balance sheet from the prior year, you'll see the operating fund had a balance of $1,021,000 in the hole. Well, you add that whopping surplus this year of $14,000, you bring it down to $1,006,000. But then we add in the $447,000 that we've been putting aside for the last 5 years. Okay? That brought it down to $559,000. And then if you take into account the extension to that $4 component, which is now up to $16,000, and not further increase it, but just continue it, you eliminate almost all but $100,000 remaining fund. So we have gone from $1,021,000 deficit to $559,000 in our current year end, April 30th. And with the board continuing the policy put into place a couple of years ago, we'll whack out $459,000 of that $559,000, and we're in much better shape. So from $1 million deficit basically to $100,000. The relevance of all that is that your assessment has had to incorporate into it not just meeting the day-to-day expenses and the amenity costs, but making up for past history in part, also making up for the IRS assessment, and there you are. So what does that assessment translate? Oh, this is the 5-year funding plan as it relates to the $26 component. The intention for which was to address the significant capital needs of our association in the coming years. It's put into effect 6 years ago. So every board, and the board changes each year, historically, and each and every board has bought into this plan to put aside monies to deal with the major capital investments. Because quite frankly, that which is funded by depreciation wasn't sufficient. And the reason is inflation. You buy something for $10,000 and 8 years later it costs you what? Not $10,000. This community center is Exhibit A. This community center building cost $363,000, the old one. It was replaced at $1,750,000. The yacht club was about $1 million at cost. You all decided, 68% of you who voted in favor of tearing it down and building a new one. Thank you. That was $1 million replaced by close to $5 million. You keep doing that, and all of a sudden your funding runs a little shy. So in any event, this 5-year funding plan to increase the assessment over 5 years and then stop it, but stop the increases, but continue it, in effect is providing us with $1.1 million each year. So here we go. The 5 years, as you see, $26 increases for 5 straight years. And then this year, there was no increase, but it continued. So we put almost $4.4 million into that particular account, that reserve account, which is restricted to major capital investments. It's not the police cars, it's not the dump trucks, it's not the computers, it's not the software. It's the major capital investments. The board can decide at any time. We originally said about $500,000 on the 10-year plan test, but that can be changed at any time. The board has the discretion to modify that as it sees fit. In any event, the first thing out of the till, if you will, was the wood duck project and the swim racket club pool, which is an unexpected 300 and some, almost 400, I suppose. So those monies were spent years ago. So what we were left with at the time we faced the yacht club, which is the first major project to be funded out of this, other than the wood duck and the swim racket club pool. And as you know, the 4.3 became 4.7. And this was always described, by the way, as a plan that provided funding before, during, and after construction of major projects. Before, during, and after, as opposed to going out and getting loans, etc. So we, in effect, are borrowing from ourselves and paying ourselves back. And this was announced throughout the entire yacht club referendum process. This was disclosed. I made presentations on this very concept. I hear some people say, well, we didn't know about it. Well, if you go back and look at the meetings and the press and so forth, it's there. Bottom line is, we got 2 more years to go with this inflow to cover the cost of what we've already spent. So we are right now at May 1, 2014, with $3.6 million available. We've got to add another 2 years at that same level, which was what the plan was. Stick with the plan. And that will bring us up to 5.8. The estimated cost is 4.7. We also have the yacht club pool project, which is not part of the referendum. And so we will have, at the end of 2017, enough left over to fund $227,000 more major projects. But again, the concept was, and I hope it continues to be, but that's not my decision, fund these major things before, during, and after construction. And I think one final slide is, what about our assessment? Well, let's look at the history of the assessment. Back in 2008, that board at that time said, oh my gosh, we have a huge problem. We have to spend millions and millions of dollars that we don't have. We need to raise the dues $150. A great part of that went to shore up reserves because of the need that board, by the way, was unanimous vote back then, 7-0, to do that. Wasn't very popular among some folks. But anyway, over the next years, you see the next year, 4 new board members were elected, and they decided, since the $150 increase the prior year, let's have no increase this year. Unfortunately, not a dollar of operating budgeted funds was reduced to achieve that 0 result. Instead, the enhanced contribution to the reserve fund was whacked. Whacked. That's how that was achieved. So then we get to 2010, which is the first year of the 5-year funding plan, the $30 increase, 26 and 4 respectively. And that is now expired through 14. So 10, 11, 12, 13, 14, end of 5 years, right? So in 2015, the year we're presently in, it started May 1st, there is no increase for that component. And consequently, all other things was a $5 decrease. But if you look back in history and say, what are our total dues increases over this period? Well, the total column tells the story. Once you get beyond the 0 year, it was $38, 30 of which was the 5-year funding plan. The next year was 45, 35, 30, 41 last year, and now this year a $5 decrease. So over this period of time, what Tom Terry has referred to in his president's letter and on other occasions, was we have solidified the financial funding base of the association to meet its long-term commitments for physical enhancements to our property. And otherwise, the dues increase, it averages, by the way, over this entire period of time from 2009 through 15, 3.3% assessment increase, of which 2.67% relates to that very necessary 5-year funding plan, which increased it by $30 a year. I say very necessary. That's not just my opinion. 5, 6 straight boards have made that same conclusion. So if you strip that away, the average dues increase for everything else is a tad more than 0.5% a year. 0.63% in your assessment for everything else. And I think that's it. Sir, you had your hand up.
Yeah, 3 questions. Where is the tax problem reflected in the financial?
It was excuse me. It was 2 years ago.
What's the question?
All right, here's the question. He wants to know where in the financial statements was the IRS $459,000 charge. Is that your question? Yeah. It was several years ago, so it's not in this year or last year. It was in 2012.
So you paid it off in one payment?
No, you don't do it in one payment. It involves multiple years of taxes and penalties and interest. It's a complicated thing. But
so you took it off in the year that you
we took the hit for it in 1 year. It related to multiple years, multiple filings, interest, all that stuff.
Okay.
But we took the hit in 1 year, 2012.
Okay, that explains that. The next, you were talking about having some revenue for the fire and EMS, and it looks like 0 revenue here. I assume
Okay. Yeah. The question is, I spoke to revenue enhancement for the fire department by virtue of billing the insurance companies and approximating $300,000. They are a separate and distinct organization, a not-for-profit organization, their own board of directors. We have nothing to do with the governance of that organization. We fund them, and that's it.
Okay. And the third question is, you have a line item of construction in progress, and I see you had a ballooning of the value of that asset. Could you please clarify what happened there?
The question is, he's looking at the financial information, and he sees a very large number for construction in progress, and he'd like to know what that is, correct? Ballooning, as he said. It's called Yacht Club.
Oh.
If you recall, construction in progress means at a balance sheet date April 30th, whatever hasn't been totally completed is still in progress, right? So you carry that asset at whatever the costs incurred to date are. And then once it's totally completed, you bring it on stream and as an asset and begin to depreciate it. So at April 30th, I think most of us in the room know that the Yacht Club is not open. So therefore, the answer to your question is it's all Yacht Club, or pretty much all Yacht Club. And some of it's the swimming pool too, which is an unrelated $900,000. Does that answer that? You had 3 questions, right?
So one more thing.
Wait a minute.
Clarification. So the value of the Yacht Club has gone that much?
It's not value, sir. It's costs. It's paying bills.
Oh, I see.
Yeah. Yes, sir.
I'm glad that you divided the costs into each individual assessment at one point in your talk.
Yes, I did.
When can we put all amenities in perspective with the larger economic, health, and social benefits to all members of our community in every report?
I'm going to give you the microphone. You can tell them what your question is.
Well, I think Sharon O'Hara mentioned this when she was running for election. I don't see her here.
She's here. Go ahead. You ask your question. I can't repeat it as well as you can say.
Well, I didn't hear it. The question is, when can we put all amenities into perspective with the larger economic, health, and social benefits to all members of our community when we compare costs?
I don't know how to answer that. I'm not sure what you mean.
Karen has ideas. She'll get around to it.
What is?
What I believe he's referring to is the slide you had up there, which says where do our dues amounts go to the various pieces. In other words, your $20.
Yeah.
Why don't we report it that way on an ongoing basis as opposed to just once a year at the end of the year? Why don't we do that on a monthly basis so people will get a better actual picture of the amenity?
Yes, that, and also comparing it to the tremendous increase in our property values and the advantages of living here, which are much greater than $20. I think.
I would agree with you 100%. What he's saying is put it in perspective, folks, right? And remind people how much or how little it may be as you evaluate where we live, what benefits we have, what we derive from this assessment, and all the amenities together which are available to every single person, every single member, only cost us $20. Put it in perspective.
Somehow, brilliant people like you who work with these numbers should be able to make some kind of estimate of that.
Estimate?
An estimate of the benefits. It's economic value, if nothing else.
You might form a subcommittee. Thank you. Yes, sir.
Do we get any money from the casino?
Oh, yes. Good question. Yeah, very good question. We do, and it's about $225,000. I'm sorry. The question was, do we get any financial benefit from the casinos? Do we get casino money? And the answer is yes. We get about $225,000 a year, and that money is it's been restricted by the board of directors exclusively for the use of our road repavement program, road resurfacing program. The reason for that is that we used to get $500,000 of gasoline tax coming through the state of Maryland, from the state of Maryland through the county. The state of Maryland essentially wiped that out, not only for us, but all counties in Maryland. So the $500,000 that we used to get was the funding mechanism for our road resurfacing program. Not fixing potholes, by the way, but roads are major investments, and you've got to dig them up, grind them out from time to time. It's a long-term project. That $500,000 disappeared, thanks to the current administration. We then, as a board, replaced it with the casino funds being dedicated. Now, 225 is not 500, so that's the answer to the question, sir. Okay? Yes, in the back.
Before I ask my question, I just want to give an explanation or clarification. You said the parentheses represent the negative, is that correct?
Correct.
When you look at your line item in budget for the agreement, I think the budgeted about $136,000, I think it was. You spent $109,000.
Yeah.
And then you have in parentheses almost $28,000.
That's the variance, right?
Yeah.
That's the variance. That's the difference between the budget and the actual.
Okay.
Okay?
So
we budgeted the profit. Let's go back. You're talking about marinas, the 27? Okay. We budgeted a profit of $136,000.
yes.
We achieved a profit of $109,000. That's a shortfall from what was budgeted. That serves a negative variance. That's why it's a practice. Good question.
Last but not least, I heard you say $20 is basically what average of what we pay minutes. Is that what I'm getting? That understand?
It's not an average, it's what everybody pays.
Okay, so if one goes, and I just want to be clear, if one goes to play around the golf, does it cost each member $20?
No. I'm failing here. I'll tell you what, I'll talk to you afterwards, but here's the deal. We budget our amenities, each and every one of them. Every revenue line, every expense line, right?
Yes.
Okay. At the end of that process, the net of all the amenities is a profit. There's a profit in the budget. Okay? So we, in our assessment, have a built-in credit, if you will. If I offered you a plan that says you can opt in or out of all the amenities, and you say, oh, I want to reduce my assessment, I'll opt out. I say, no, sir, you owe me more money. However, when we took the books up at the end of the year, we actually lost money, and the loss was $20 for each and every one of the 8,400. Okay? Right now, those amenities, you don't go get a free meal at the yacht club. You don't go get a free round of golf at the yacht club. Some would advocate that, where you load up the dues and covers everything, everybody pays for free, but that's not how we do it. Okay, question here. Sharon.
Well, this isn't a question. Alan, thank you. I am back here, by the way. Mr. Thomas, just this gentleman here. What we're talking about, and we all have different ways to talk about it, is when you look at the whole bottom line, end of the year, all the amenities cost you less than $20 a year.
Less than $2 a month.
Money that you're putting into the association with 909 this year. $20 of that takes care of your it's less than like less than $1 a month. And all of these amenities are part of the package. That's why you bought here in Ocean Pines. Because of the golf and pool and tennis. That's what helps your property value. Anyone, and my business is marketing. Anyone that's at this yacht club has helped raise your property value. I mean, really. Anybody here looking to do something, this $20, it comes out of your pocket, but boy,
We've lost control. One last question.
Only one?
yes.
Yeah, right.
Only one? Thank you.
I'm sorry to disagree, but my assessment for the county went down. It didn't go up because we got golf club or any of that. My assessment went down.
I think the question is, would your assessment go higher or lower without the amenities?
No, it went down.
I didn't ask you about that. Would it be higher? No. In the scheme of things, is your real estate value, assessed value, higher or lower? Not in any 1 year. Higher or lower because of the existence of all the amenities in that community? I may think it's higher, by the way. Okay. I got to cut it off here. The president is grabbing the mic from me.
The tax assessment has nothing to do with the real assessment.
Thank you.
You guys way off base.
I have one last thing to say. I mentioned earlier we had two bottom lines this year. When you get your audit, well, if you look in your packet, what you'll see is the bottom line of the operating fund is not the $14,746. It's rather $462,155. And again, that's because we released that 5-year build-up in the operating deficit recovery fund. Okay, we had to treat it that way in these financial statements, but that's just a mechanical thing. Okay, but the fact of the matter is, it did help us tremendously by putting those monies aside to wipe out that inherited deficit. Thank you, Tom.
Thank you.
Could we get some more numbers up here, please? It is my privilege at this point to try to summarize where, at least I believe we are as an organization. It's my responsibility, I believe, as president to do that. We clearly are on strong financial ground. When you go from almost $500,000 worth of deficit down to 100 in a 4 to 5 year period, we're in pretty good shape. We have, in fact, made budget or better for the last 5 years. We all remember the year the golf course was under repair, and we lost a whopping $536,000 at the golf course then. Obviously, that's not something we want every year. We have chopped away at the inherited deficit, as Pete talked about. And I do need to get into, just make sure we're absolutely clear on what the amenities do and don't do in this community. When you run a business, you put a budget together at the beginning of the year and you say how much money you're going to make. Or lose, depending. At the end of the year, what really counts is where did you end up? All of our amenities together, all together, cost us $167,000 in change, and there's over 8,000 members of this organization. You do the math. That's $20 per person per year. That's including all the golf losses, all the yacht club losses, everything. So when you put together an organization, folks, that can say at the end of the year that your amenities cost you $20 from their actual business performance at the end of the year, forget budget. Well, they really do. They cost you $20. That's what they cost you, all of them together. The assessment, 7 years, 3.3% increase. 81% of that was in fact for capital needs, which we desperately needed. $34 worth of increase in other. Those are the operational dollars we gave to Bob Thompson over the last 4 to 5 years to run this. That's how much more money you gave him per year. Not per month, not per day, per year. $5 per year. New support programs that have come online, even though the dues have only gone up $5 a year on the operational side. We have a brand new drainage team in place with new equipment that has been bought for them, dedicated on keeping our waterways flowing and the rainwater hopefully not overflowing our houses. We do still have a long-term plan that has to be put together for that. But we have dedicated the team so that people can understand we're paying attention to that issue without question. We have an updated website. If you haven't seen it, by all means go on and see it. I travel the country working in economic development in other communities as part of what I get paid to do. And I can assure you, I have brought up our website to other communities, other organizations, and they are absolutely at awe of what we have in our community and what has been created for us. It's much easier to get to the information that people want and for us to promote our organization. We also have movie nights now on Monday night, which is something new that we put on. And we have the junior lifeguard program. There's a list of new programs that have been brought on over the last year. These are just in the last year, let alone the last 5 years, of what's been brought on for us as members. I'm going to ask you an amenity question. If you could get access to, for less than $2 a month, a pool at the beach, parking at the beach, 3 swimming pools, an indoor pool, a splash pad, tennis courts, platform tennis courts, pickleball courts coming, hopefully, yacht club, restaurant, event catering, you see the list, $2 a month. Less than that is what you're paying to have these amenities available. And I would submit to you folks, and I wrote this in one of my letters, quarterly newsletter, the tapestry of our community. This is what makes Ocean Pines different from simply living on a street somewhere in Worcester County. Having all these amenities. Now, not all is happy and wonderful in Ocean Pines. We do have challenges. The golf is still a challenge for us, folks. We still have to make a decision on what's going to happen there. Just to bring you up to speed, as I have made public, that I have been working on a program to interview folks who may come in and help us with that program. The Casper team is working very hard to try to make their numbers. The golf rounds are up. Things are going better for Casper at this point in our course. If you don't play golf, all I can tell you is that if you play golf with me, you're probably better than me and you've never played. My handicap is I show up to play. The reality is our course is in immaculate condition. The people that are coming in and touring our course are stopping and telling us it is fabulous, its condition that it's in. The investment that was made was a long-term investment. That $441,000 loss a couple of years ago happened because we invested in our own future to maintain one of those amenities that cost you $2 a month. Drainage team. It's been created. They're working hard. They're dedicated. Bob and the team are now working with a group of citizens to put together the overall plan. We don't have a whole lot of mountains around here in order to drain water off of. This is a big challenge, but it's certainly not being ignored. Roads. Without question, we have dedicated the casino money to the roads. But as Pete said, when you lose $500,000 and you replace it with $225, the team, the Ocean Pines staff, has done a very good job of maintaining the roads, putting a plan together that keeps things going. However, that's going to have to be monitored very closely. And the bad news and the challenge is if we can't keep our roads up, which is a major part of our community and what makes it valued, if we can't do it, the cavalry's not coming. We're going to have to pay it ourselves because Annapolis kept our money. It's that simple. That's what happened. When you buy gas and you pay tax, that money is supposed to come back here. It's not.
Yes. Talk about roads. It would be so nice if for White Pines we get an alternative. We live on Windjammer. You don't see in the book. You can't see in the dark. And at least if they're white lines.
Okay. The question was, can we look at Sandy Hook Road to possibly put some white lines on the side of each road so you can see the edges? It is dark in Ocean Pines. That's something we can certainly ask Bob to take a look at. We also have a challenge of the IT backbone and all of the systems of Ocean Pines. They're very archaic. They're very old. If any of you have ever tried to follow along in one of our board meetings over the internet, sometimes it gets pretty hard to do because our servers are very old and basically worn out. The 5-year funding plan, as Pete says, is keeping us in position, but it's at $227,000 at the end of the plan right now. Folks, we are not over-reserved. We do not have excessive money set aside. When you look at $227,000, that is not a reserve account that is too big. So what about the future? We have to make a decision on the Casper relationship. Other facilities like the rack and stack and the order of when things are going to be addressed. We're looking for a report to come from Bob on that in December. It's an update of a plan that was put together by the facilities planning group that put us on a path to actually truly understand where we are. And following the capital improvement plan, we have to keep that going. It's what keeps us afloat in the capital world of our community. I have some thanks. I want to thank all my fellow board members that I've served with over the last 4 years. We haven't always agreed, but I believe we have done the right thing for the community. Sometimes there have been tough decisions. I want to thank all the clubs that support the OPA, the Search and Elections Committee, both for putting on a very safe, honest, straightforward election here, the advisory committees and the facilities planning group that always help the board and Bob in just making decisions. Thanks to the OP folks who attend our events, use our facilities. You're our best ambassadors. And thanks to all those who work every day to help make our community better. Personal appreciation to the OPA staff. Folks, you have no idea how dedicated these people are for salaries that are not exceptional. They are not. The OPA staff is absolutely wonderful in how committed they are to you. Bob Thompson, what can I say? You looked at the numbers, it's obvious. You look at the condition of our community, it's obvious. You look at the direction of our community, to me it's obvious. Bob, you've done an absolutely fabulous job over the last few years. It's been a pleasure working with you. Thank you. This next is tough. Let me tell you, folks, when you stand and serve on the board of directors and serve as president especially, you have to have support at home. You have to have a person that understands that you're not going to get to go to the beach because you're going to a meeting. You have to have someone who checks your ego at the door sometimes to help you keep straight yourself. All I can say, Carol, thank you very much for the last 4 years. Appreciate it. Recently, I wrote an article that said, don't change your starting point. Well, I didn't change my starting point. I went back and looked 4 years. We have accomplished a lot together. We have accomplished capital programs. We have collaborated with the Ocean Pines Volunteer Fire Department to resolve what could have been a very negative situation. We now have a very positive relationship with the Volunteer Fire Department and a very good structure that for the longest time into the future should allow both groups to work very comfortably together. We expanded hours of this community. One of the first things we did, no longer closing at 5 o'clock and locked up on the weekends. In fact, this place is so busy now you can't get a room. We lowered the assessment for the first time in the history of the organization. And we didn't do it by cutting programs. We did it by cutting costs. We didn't cut capital in order to lower the dues. We cut costs. It was only $5, I understand that. But it was a lowering of the dues. The board did their job. So did Bob Thompson and his team in putting that budget together. We've renewed the beach club, cleaned it up. Second floor looks beautiful now. The restrooms are what they are. They absolutely need to be replaced, folks. There's no doubt about that. But Bob, you and your team have done as good a job as you can do with the facility that you're stuck with there. And we have refurbished the golf course. To an expense, but folks, it puts us in position of having a long-term amenity. We've evolved the relationship with the general manager over the last few years. We work hand in hand, or at least we hope to, and I hope we can keep doing that going forward as opposed to an ongoing conflict, which gets nowhere. It doesn't help anyone. We've expanded the community membership and involvement. We have streamed the board meetings online. You can find information on the website. We've reached out through the advisory committees and regenerated their involvement in what we're doing. And the GM has evaluated folks and made some major changes at his chief staff positions over the years. Lessons learned. What do I feel we need to do as we go forward? We have to stay vigilant in having a long-term view in decision-making. Sometimes you have to decide to fix the golf course and lose $500,000 in order to have the community set for that amenity for years to come. You have to have a measurement of success that isn't just whether your dues go up or not. There is success, as this gentleman has referred to, of what is the quality of the community that we have around us. We are special in Worcester County. We absolutely are, and I hope we can stay that way. Process has its place. I know that there have been times over the last 4 years, there are those that looked at the board with me running it and looking at it as if it were helter-skelter. The reality is, folks, process has its place, but it's action and getting things done that actually counts. So be careful to not look so organized and then realize you haven't really done anything. Focus attention on the broader community. What do I mean by that? If you were to canvass our board of directors members, I think they would probably tell you that we end up spending over 80% of our time focused on $2 a month. We spend 80% of our time looking at the amenities. That's what we do. All the angst, all the numbers, all the crunching, and until this year, quite frankly, there wasn't a focus on drainage. And why was that? Because we were spending 80% of our time looking at $2 a month expense. The amenity. Look at the broader community. That's where we have to pay attention. That's where the efficiencies are. That's where the future positives of the community come from. I'm not saying we ignore the amenities, obviously. But what I am saying is let's be really careful that we don't forget the rest of the community as we spend 80% of our time arguing over $2 a month. Remain focused forward. Don't always look back. There's nothing wrong with learning from mistakes. Nothing wrong with that. But if all you ever are is looking back at what went wrong, you won't know where you're going. And lastly, as my closing comment, I really want to say to you, don't assume automatically that the board of directors doesn't know what they're doing, that we haven't been informed, and most importantly, that we don't care. We care a lot. I have served with many different people over the last 4 years as board of directors members. Whether I agreed with them or not, whether we fought with each other or not, I can tell you one thing that is absolutely positive. You don't do that job if you don't care. I'm telling you that. It's too hard a job to do if you don't care. Those folks care. They care a lot. They put a lot of time in. I want to take this opportunity to thank you all for the opportunity of being president of this organization for 4 years. As I have told many people coming into this year, I have no intention of going forward. 4 years is enough for anybody to try to do this. But I do just want to thank you and all the members, those who have told me where I've made mistakes and those who have told me where I've been great. It's been a wonderful opportunity in these last 4 years, and I appreciate the opportunity to do that. And I will now turn this over to Bob Thompson. Thank you.
All right, I realize I'm between you and what you have to do the rest of the day. So that and the election results. So let me. Can you hear me all right? Okay. Let me run through. I don't get to give you all the numbers today or give you all the things that built this up. I'm going to give you kind of fun stuff, more exciting stuff. I'm trying to use that word as many times today as I can. All right, let's talk about our biggest project in the history of our organization, the Yacht Club. And these are, when you see these are actual pictures, not Photoshop pictures. This was a picture of the new club first thing in the morning. Demolition started. I thought that, you liked that, didn't you? Yeah, good. Again, I'm the fun, exciting guy. Joe, how are you? I know you're here. Mr. Excitement here, Joe. Okay. All right, demolition. Wanted to show you, it's interesting. One of the things Tom always says to me, don't forget your starting point. It's real easy to forget with the Enjoyment Club, all the activities, everything going on, where we actually were about a year ago. Okay, and I thought I'd show you some slides so you can actually see the transition from where we were then to where we are today. Demolition of the club. It was interesting as this was happening. I walked around with a couple board members and a couple of association members during the demo. Bittersweet moment at the time. You know, the club, a lot of great memories there, but as it started to come apart, you realize why we needed to do this project. Then the construction began. Now remember, one of the worst construction winters we've had in years, between how cold it was, the snow, and everything else. Foundation going in, the piping going in underneath it, some of the utility connections. This was pretty amazing. The guy hops on these and runs around smoothing out all the concrete. A lot of concrete out there, folks. Building the towers for the 2 elevator shafts. Some of the steel beams when they erected the building. I was going to put Rocky music to this, but it would slow it down too much. I had the Tiger. Anybody remember that? Oh, yeah. Second floor, looking out towards Ocean City. Roof trusses going up. Now you start to see the actual shape of the new structure. By the way, all these pictures are available on the website and many more. I just took some clips out of it, so put it together in an annual meeting. I thought it was important for such a large project. And
And then the final stages of the new building. Interior, second floor. Interior, the bar areas. Some of the crown work that was done in there, primarily on the second floor. Now the tree blocks the rest of the building. That's a big tree. You just don't notice it. It's actually the angle. Nobody tell me the building's only that big. I know that's the phone call I'm going to get, so I made sure I put the next. There's the actual building. Aerial view. We had some aerial shots done. Gives you a lot of perspective. If you recall, the old building sat right in this general area. So there's the new building, Mumford's Pool, Yacht Club Pool. Pretty amazing when you sit back and look at what we've accomplished in the year. Another angle. This was not the same plane that buzzed the Yacht Club last. Anybody was there? And this is us using the Yacht Club. And this is not, you'll notice some folks say, well, this was a grand opening. That's why there's so many people. It's not, because you know it's a tiki bar zone. Some interesting facts about the club. Number of events since opening. We've had 36 yacht club events, 7 country club, and 5 beach club. The reason I put the beach club and country club because the food that was for those events at the beach club and country club were actually prepared out of the yacht club. So I thought it was important to point that out. We built that second kitchen so we could do a lot of catered events. It's working the way we expected it to work. Moving forward, we have 71 events already booked for the new club. Takes us in where we think by November we'll probably be booked for every Saturday for 2015. So they're here. So those who said it wouldn't happen, folks are coming, and we appreciate it very, very much. Some things that we want to point out with the Yacht Club. We were ready for Memorial Day. Great team in place running the club. Events are booking fast, not only for the weddings, but all kinds of other events, a host of anniversaries and retirements, all those type of things, which is exactly what we're hoping to do. It really is a community gathering place for us. June revenue numbers were record numbers. We were over $300,000 in revenue. I had a little pushback from some folks saying, well, yes, but our numbers were off because our expenses were higher. Our expenses, the biggest part were in our wages. If you recall, 2 big obstacles we've had over years with the Yacht Club: inconsistency of the food and inconsistency of the service. So we made sure the first 2 months of operation we had more than enough staff so we didn't have inconsistency of either of those items. So when someone questions, well, we need to reduce those costs, great. Tell me what startup doesn't have high costs right at the beginning. Anyone tells you that's not the case has never started up a company or business before. Okay, we made sure that we had enough staff to serve your needs. Now, July revenues, and again, the numbers we haven't finalized, but the July revenues actually are much higher than the 303. So it'll be the second record month in a row. Okay, we've already started making the changes at the club to reduce the expenses, wages, some of the other food cost items that we incurred the first 2 months, but we knew we would. Thought this was an outstanding picture. First one I showed you with the blue was the morning. This one's the sunset at night. Has not been photoshopped. The actual picture looks spectacular. So that's the club that you all have ownership of. So thanks for letting us put it together. Other stuff that occurred this year that kind of, because the Yacht Club dominated the news, everyone paying attention to that. Hingham Lane work got completed, which dramatically improved the drainage in that area. We talked about the drainage I mentioned twice. With the drainage throughout the community, Hingham Lane was one of the major points off of 11 and 12 and blocked up that whole interlinks area. That's been improved. Splash pad just went in. We had a lot of use of the pad already. We're working through a couple of the details. That as with anything new, you have your bumps, just like we did when you opening the club. One of the things, some of the little kids, when you look at the little mushroom, are bending down under the mushroom and standing up, bumping their heads. It's not sharp where it actually cuts them, but if a little 18-month-old screaming, petrifies you. So we're getting Public Works putting some rubber on those this week, so we're making modifications with everything that comes out new. But it's fun. The parents that have been using it really enjoyed it.
Where's that splash?
Splash pad over at the Swim and Racket Club pool outside. We had the small baby pool there. Yes, ma'am.
They have that?
Yeah. On the sea breeze. Some new initiatives. Public Works, what we did last year, and I won't just say Saturday, wherever it says, you just tell me I keep saying Saturday, and I do. For the month of May, we actually opened up the Public Works yard through Monday through Saturday, so folks could bring yard debris and branches and stuff in where we would take care of grinding it up. It was very, very successful. The membership appreciated it. We'll do it again this year. We're in negotiations for natural gas. Drainage team is in place. I don't need to cover those because Tom and Pete both hit those. Just some upcoming projects, just to keep you abreast of what's going on in your community. Whitehorse Park Boat Ramp, we're targeting a fall time frame. We're finalizing some of the plans for that now. As you know, followed the last month of board meetings, pickle, platform tennis, debate what's going to be put, what's going to be built. We'll have something going on down at the Mankle Meadows Complex. We will be focusing on road resurfacing this fall, and that will be used by casino monies. Two other major projects, information technology, that's the backbone or infrastructure for our computer network, and police station. So these are all areas that are in the budget we're focused on as we move forward. This was kind of neat, came out. I don't mean to put all the ugly stuff on here, but it's how they rate us. People have asked. Top 10 cities, safest cities in Maryland, and Ocean Pines was rated at number 1. Yeah, most people, that was over. Plus, and folks said, well, that's not a good rating. Well, look at what they did. They took FBI crime stats. And they looked at major crimes, assault, murder, those type of things, and then some of the property crimes. And then they qualified for populations above 5,000. So we're nearly 12,000 year round. So that's where we qualify for it. So someone said we're not a city. Correct, we're not. There's other qualifications. A population in a community. So that's how we qualify for it. So we owe a lot of that not only to the membership. Okay, for what a great job you do, but also to our very, very dedicated police force. The chief, I think, like you're spending too much money there. I don't think you spend enough on what these folks do for us each and every day. If they've ever had to come to your house to help you out with something, you know exactly what I'm talking about. So, again, thanks, Chief. Tom talked about, he's out in economic development, recognizes with other communities how great the website is. Not only do we feel it's good, not only does Tom when he's out with our communities, but we were also recognized by Maryland Recreation and Parks. Annually, they do awards. One of the things they did, Ocean Pines, last year we won several awards for some other things. This year we won Best Website. So that's pretty significant because they go and look at all the communities in Maryland, all the websites, and they named ours best. So that was really, really cool. Great accomplishment by our public relations office and with our new website. And we also had one of our publications recognized as the best in the state. So there's a lot of things that go unseen that you're not aware of, but represent our community very, very well. Here's a picture of the website for those who have not been on there. Easy to use. We've had a lot of feedback from our membership on the quality of the site, how easy it is to get on, take a look around, find information. It was, we certainly, and we're going to continue to make those upgrades. Well, there's still a lot to come with that, but we're excited about where we are. Year-round farmers market, you saw it out there today. That's something we expanded this year for our membership. They were interested in it, so we've been doing it. That's been working out very well attended. And our memberships, it keeps growing each year because more of us realize you don't have to leave the community to go get your produce. Other highlights, I'll go through these, again, pictures, fun stuff. Some of the bounce stations, this was at one of our craft fairs. Man's actually making jewelry on the spot. State Police helicopter, the medevac was out during Big Truck Day, and that was very, very interesting. See, again, fun, exciting, good stuff. If I could make it bounce, I would have. I didn't have time last night. All-American family here in Ocean Pines. Boat parade. Now look close. I had to look 3 times at this just so you know. That's not the person. This is the person. It's a towel. I'm ordering them from the front desk. Everyone needs to get one. They took a picture of Pete Gomsack, put him in the boat. This one was fun. Again, good fun stuff. Although I had to look 3 times. That is not a child. It's a stuffed animal. I've got some kids from the camp that we'd like to put in there next year. Okay? Like junior lifeguard, the Tom had mentioned, or Peter mentioned, where aquatics is starting to the complexion of aquatics has changed. We're starting to have new programming. Junior lifeguard program, Colby had brought to it, filled up immediately. We had to run another one. It's filled up. Great program. A couple of things you think about. We're always looking for investment in the future. Not only is it fun for today for these kids, 10, 11, 12-year-olds, but as they go through, they get certified for junior lifeguard. Guess who gets first pick at them and who they'll want to come back to guard our pools as they start to age. So this is a very, very good program, and you see it filled up. They had a lot of fun with it this year. Again, we all don't get to see all the great things because we're focused in our foxhole, our little area that we're doing. We don't see the whole community. So that's why I want to make sure I get to share this today with everyone. Teach the kids to fish, always a big event. Tell me she doesn't look happy. She either just smelled a fish or she's happy to go fishing. The Freedom 5K, 3rd year now we've done it. Real exciting. Even though we had to move it, because remember 4th of July, the weather was just real bad. We had thunderstorms and everything. Had to move it by day. Still had big attendance. There's everyone getting ready to start. At the end, we actually donate a check each year to the Home of the Brave, part of the proceeds from that. So very, very good event. Almost 300 runners again this year, and it keeps growing. I think if we'd done on the 4th, the weather had held, we'd probably had even more this year. The fireworks this year, those that didn't see it, you missed something really spectacular. People were extremely pleased. In years past, we had some hiccups. This one went extremely well. So I just thought I'd show some of the pictures of it. Thought that was pretty cool. Financials, I'm not going to take all the time. I knew Pete would take a ton of time. And again, I'm not going to slow you down today. Bottom line, what I focus on each and every day, where are we, bottom line for us from the operational. That's what I control each day. That's why I work with department heads. Work very closely because it's your money helping to fund everything we do. We're almost 15,000 positive variance, bottom line, the operational side of the house this year. So very proud of where we are. The team works very hard. Your department heads work very hard to make sure we hit positive variance each year. So I want to make sure I point that out. Any questions for me? Yes, ma'am.
The 2 bridges that you have that one. Plans for repairing those or fixing those going cement ready.
The 2 bridges, when you go out to St. Martin's, you're talking about on the parkway right down the street here, right?
Yeah, the one you talk about
golf course on your right as you leave here. Yes, ma'am. The question was, are there any the undersiding of that bridge? The underpinnings are starting to corrode and fall away. Yes. That is something we're looking at. As a matter of fact, I appreciate the question. I'd almost paid you to do a layup for me on it. We actually had a meeting with the county on Monday to have a very long discussion about that bridge. That will be the first bridge based on the current rating. There was a bridges used to be rated with a BSR. Now it's an SBR rating. The way those bridges are rated now, it goes through a national program. The inspector actually plugs in what he or she finds, and the computer spits out the rating. With that rating, the bridge actually drops slightly from where the previous years were. So it's now drawing a little more attention. So we are looking at that, and that's something over the next few months that we're working on to come up with a plan. Yes, sir.
Where does the country club fit into the long-term plan?
The question was, where does the country club fit in the long-term plans? This election will make that decision. I don't. Yes, sir.
In regards to the drainage,
Yes, sir. Drainage?
is there any way I can get the schedule for when you're going to do the things? I live on Briar Crest. I have a problem every time we have a heavy rain. I get flooded. I'd like to find out if you guys plan anytime soon come in here. What do you think if someone could work things to eliminate my problem?
Okay. I'm not familiar with your particular problem. Call my office Monday, and I'll let you know when our next meeting is. You're welcome to come. They're open to anybody. Okay. Steve?
Gentlemen, I have a question here about the roads. How about county
For the what? I'm sorry.
county responsibility versus
For the bridges or the road? Oh, Pete wanted me to bring up the different responsibility levels for replacement of the bridges. Bridges are a little different than our roadways. From a cost standpoint, they were adopted several years ago, and actually Mr. Rako was very involved in that, accepted into the county bridge program. So what that means is maintenance of the bridge is our responsibility. Replacement of the bridge becomes a joint responsibility between us and the county, i.e. the state. The state funds the county for bridge replacement. So if it falls to replacement of the bridge, it's an 80-20 rule. We have to pay 20% of it. The county, via the state, pays for the other 80%. Maintenance is 100% ours, 80-20 if it's replacement. Is that what you're looking for? Yes, ma'am.
I just have an agenda question. Is it possible to hear the election results before the public comment?
Yeah.
That would be up to Ms. Kateria's president. I'll handle that. Okay. And I'll keep it short because I know I don't want to hold everybody up. Yes, sir.
Come in the North Gate. That's conversation.
They're unsafe.
All that pollen laying there is blowing into somebody's house.
Okay.
Those ponds.
Okay. Thank you. Mentioned concern about the pond at the North Gate. Anything else before I? Yes, sir.
Water breaks with the community. Is that the county's responsibility? Or?
Yeah, the question is about the water breaks with the pipes in the community. The water and sewer are both county
so
programs.
they would be the ones
Responsible in replacing it.
Okay.
Yes.
All right, thank you.
All right. Anything? Yes, ma'am.
You know, you could put an awful lot of money in coffers if you start speeding tickets on Mumford's Landing Road. Apparently, people think they're going to run out of up there if you drive 80 miles an hour to get there. It's a 25-mile-an-hour speed limit. Well, no.
Okay. The question or statement was we could put a lot of money in the bank or in the coffers, using your word, if we gave speeding tickets on Mumford's Landing Road. Two things. A, I'd love to say we could make money off speeding tickets. We don't. We don't make any of the money from it. So our police department is not incentivized by giving tickets. It doesn't build our budget. It doesn't help us. That passes on to the county, i.e. and the state. Okay, so there's no income to us. I understand. We have increased in monitoring there, and we can talk to the chief about increasing it more.
That's part of what they do.
All right, one more and then I'm done. Are we good? Thank you all for your time.
Okay, the good news is that if you follow Resolution B03, which was put into effect in November of 2008, the actual next step in our agenda is, in fact, the election results.
Good presentation.
Bill, you know that's you, right? I wasn't the one announcing anything.
I am the man, so I can take my time. I can take my time. Before I announce the results, I'm going to take a moment to thank the 5 individual folks who took their time to run for office and to serve us. It's, as Tom and many people have said here, it is a labor of love to do this. Maybe not. I don't know. It's a very work-intensive responsibility. These folks do not get paid for it, and it's a credit to them that they want to take their time to get involved in working with our community. Certainly, let's have a hand for all 5 of these folks. The results are: number 1 vote getter with 1,767 votes is Pat Renault. Number 2 vote getter with 1,738 votes is Dave Stevens. Number 3 vote getter, Jeff Nepper, 1,392 votes. And the number 5 vote getter, fourth vote getter, Terry Moore with 1,323 votes. And the number 5 vote getter, Lawrence Lee, with 456 votes. Our 2 new board of directors are Pat Renault and Dave Stevens. Congratulations, gentlemen. Good luck. Excuse me, media people, I have a copy of these results, a few of them, so you don't have to run up to me and get some stuff. But I can get those to you.
Okay. Congratulations. Public comment. Going once, going twice.
I want to just apologize to you for not being there. Okay?
Okay, Doug.
But I think it's not right what we do. This man is the question. And he's not able to make a report. This man has to do it. Something like that.
Motion to adjourn. Thank you.